Hello everyone, I'm Shekhar from Momentum Labs. This is a weekly review, and today is 23rd June 2024. That is day 83 of my Momentum investment journey, building it in public. Now, in the weekly review, I do three things. The first is to review my portfolio and compare it with the index. Second, I also take a look at the markets and try to gauge how are they performing. And third, I also look at the charts of the stocks that I'm holding and see how are they shaping up. So that is the broad objective of the weekly review. And without any further ado, let's begin this video. Now, before I begin, let me give you a caveat that I'm not a SEBI registered advisor. I'm a normal DIY investor just like you guys. And if at all any stocks are being discussed, then please don't treat them as any investment advice. It is only for education and knowledge sharing purpose. But if you want to copy or if you want to emulate something, then please try to see what is the inputs that are going into this rather than the outputs, that is stocks. The inputs are like the rigor in terms of journaling, tracking the data, updating the portfolio, or maybe the rules that I follow for the momentum investment. So these are something that you can definitely take a look at and try to get some inspiration. So the portfolio performed uh, by 6% or improved by the portfolio moved by 6% for the last 83 days. I started to invest in this momentum based uh, investment style from April 1, 2024 onwards. So in these 83 days, the portfolio was up by 6% net of fees or transaction charges. When I say fees, it is nothing but transaction charges or the realized losses. Whereas the index, if at all someone has invested in a Nifty 200 index on April 1, 2023 or 2024, their money would have been now 107.34. As in, if you invest in rupees, it would have moved by 7.34% and it would be at 107.34. So if you see the comparison between my portfolio and the Nifty 200 index, it is lagging by 1.33%, or there's a negative alpha of 133. So what essentially we are trying to do by building such quant or rule-based investment styles is to beat the benchmark index. And that is what we call as alpha. If you're unable to beat the benchmark index, then there is no point of actually doing such a elaborate process. You might as well just invest in the index investments. The whole objective of doing a DIY strategy is to beat the alpha over a longer period of time. So if you have seen my earlier weekly reviews, the overall NAV of my portfolio strategy was up for a considerable amount of days, and it did fall below the index, but again it rebounded back. I think that's the feature of momentum, that whenever there is a volatility, we'll take hit. The first momentum strategies take a hit, but whenever the momentum regains or the uptrend begins, the portfolio again starts to do well. So let's take a look at the NAV. The blue colored line is my portfolio, whereas the red colored line is the NAV of the Nifty 200 index. I take Nifty 200 index because the universe for my portfolio is Nifty 200. I constitute or I construct the portfolio based on the Nifty 200 stocks. I select the top 15 stocks based on the momentum and allocate them equated. So if you see, the blue color line has been performing well above the red color line, and it did crash after the or during the election season. Election results were out, and since then it has been lagging. Now, since then, the portfolio has not been able to make a push above the index. So we'll have to see wait a couple of weeks before the trend begins to change towards the upward or the downward. If it begins to move downwards, we have our exit rules in place. So we'll get out one by one from the stock as and when the exit rules are hit. And the second thing that we need to notice is the drawdown that I track. The drawdowns are nothing but the difference between the peak to the current trough. So there was a max drawdown of around 12.75% that happened during the election results day. And since then, the portfolio has been recovering. Now the current drawdown is at -5%, meaning from the all-time highs of these values, I'm right now at a loss or at a level, which is 5% less than the all-time highs of my portfolio. That is how you can understand a drawdown as. So the drawdowns have been slowly reducing. We'll have to see how this happen, how this shapes up, and we hit if we hit all-time highs or not in the next week. Now, if you look at the XIRR, it is at 47%. Nothing to infer from here because we have invested just 83 days. So XIRR makes sense if we take a longer duration, maybe like 1 year or so. So we'll have to see how this number also moves. And if you look at the portfolio, there are some good stocks that we have picked up and which are doing well, like Siemens, Prestige, Vedanta Limited, Dixon, Cummins India. Then there are some worrisome stocks like Adani Power, which are very close to or verge of getting exited because they're at minus 18% from its all-time highs. So my exit rule, one of the exit rule is if a stock goes below 20% from its all-time high or 52-week high, I exit the stock. So we'll have to see how this happens in the next week. And then there are three stocks where I've already made a sure short profit. What I mean by sure short profit is if let's say the the worst case loss, just like I mentioned, if a stock falls below by 20% from its 52-week high, that value or that price point, I call it as a worst case loss. If my buy price is below that worst case loss point, then it means that I'm in a profit. So there are three stocks where I'm in a short profit, that is Siemens, Prestige, and Vedanta Limited. Now, if we take a look at the exits, so far I've exited a lot of stocks. To be precise, I've exited around 21 stocks so far. And out of these 21 stocks, the net profit or loss that I've realized was minus 3,194. Essentially, nothing much. There have been some good exits and there have been some bad exits. So overall, the realized losses are at a neutral level. Now, if you see the equity curve has been flat for the first 1.5 month, and then since then it has started to rise up, and then it did fall by massively during the election results day, and again it now bounced back. Now I'm right now at the level of 1.9 lakh in terms of net profit realized. So if you see, there are four components of net profit. One is the unrealized profit, which I just showed. This is the unrealized profit. Then I add the transaction costs to it. So far, I've incurred 10,000 rupees worth of transaction costs because every time you make a purchase or make a sale, you'll have to pay a certain amount of fee or brokerage or STTs or transaction charges to the government, right? All these add up. Now that amount is at minus 10,000. And the third element of the net profit is the realized profit, which I just showed, that the realized profit are the profits or losses that I've already incurred. The fourth component is the dividends that I've received so far. So far, I've received dividends from Vedanta Limited and Trent. So these are, this is this number. So when you add all these four, you get the net profit. If anyone of you is interested in knowing more about this portfolio, how do you construct this, how do you track this portfolio sheet, if you want to know more about this, then let me know. I'll drop a Google Forms link, and if you let me know, I'll share some information around this for you guys. Now let's move on and see the stocks and the market also. So first, let's take a look at the markets. Now I track markets with the market cap wise. I track the five important indices, starting with the Nifty 50, next Junior 50, then the mid cap 150, and then small cap 250, and then lastly micro cap 250. We'll also take a look at gold just to get a contra view of what is happening in the overall market. And once we take a look at the market cap, we'll also see the stocks. Now in the market caps, the way I look at it is I try to give some kind of a ranking to each market or each market cap. Basically, this will help me to understand a bigger picture of what is happening. If let's say if you're investing in any momentum style, it is always important to know what is the bigger picture saying. How is the market breadth performing, or how are the indices doing? So only if the general market breadth is good and the trend is upwards, momentum strategies work. If the overall trend is sideways or downwards, then the momentum strategies will not work. So it is important to always keep a tab, if not on a daily basis, at least on a weekly basis, just to see where the markets are heading. So if you see the first index, which is Nifty. Nifty is at an all-time highs. It is consolidating at these levels in this tiny range. So I've given a ranking of 1 because it's at the all-time highs. Even though the red candles are there, but still these are not large, big red candles and consolidating in a tight range. Nothing looks scary as of now. The junior is also really good. If you see junior, it is junior has this pattern. Nifty junior, whenever it moves up and then again it consolidates and does a orderly pullback. What I mean by orderly pullback is if it overextends from its 21-day moving average, it again comes back to its 21-day moving average or 50-day moving average in an orderly fashion. It doesn't crash, and it comes in orderly, and again it bounces back, and again it comes in an orderly fashion. It touches and again moves further up. So if you see now, right now also, it looks just like that. It is trying to make an orderly pullback towards its 21-day. So seeing at this trend, maybe the next week also might be the same pattern of trying to come back to the 21 EMA levels and again then push further. So that's how it looks like. But even mid cap is also good. It is consolidating in a very tight range. Nothing harmful, no big red candles or no volatile movements. Proper orderly fashion, pure good pullbacks and bounce back from 21 EMA so far. Small cap is also really good. Small cap has bounced well above its horizontal resistance at these levels and is at an all-time high. Micro cap 250 is also really good, but small cap and micro cap, they have overextended, I believe, because if you see the distance from the 21 EMA, they are at 7.5, 6.5%. So maybe they'll undergo some kind of a pullback or a consolidation at these levels again to further resume upward journey. I don't see any negative news as of now or negative chart structure. I'm not that great at chart reading, but at least with whatever knowledge that I have, I don't see any issue with that. Now coming to the gold, gold is also doing well apparently, and it is also undergoing a orderly pullback and a consolidation. Now it is at an all-time high. Some might also say that it is forming a head and shoulders pattern, but unless this black color line which is there, right? If it gets taken off, then the inverted the head and shoulders might not be happening. Let's see if gold is moving and equities are also moving, then it is a peculiar market. And let's go and check the Nifty 200 because that is the favorite index of mine, which I follow regularly. Now this has been undergoing a channel since last 6 months, but recently it has come out of the channel and it is consolidating above the channel levels in a very tight range. So everything looks good, and we'll see how it continues to perform. So far, so good. Nothing worrisome. So let's take a look at the stocks now. Now, in the stocks, I see that they are trying to make, especially the PSU stocks that are in my portfolio, they are trying to make a consolidation at a new high levels. If you see this horizontal line, this is for BDL. They made a good up move. Now they're trying to consolidate within this horizontal range and the 21-day EMA. Same case with HAL, BEL also. So this is some commonality that I found. MassDoc is also really good. It has broken out of a very long consolidation and is now ready to go. ABB also is doing a very good orderly pullback. So these are all stocks which are part of Nifty Junior 50. So if you see the bigger picture of Nifty Junior 50 doing an orderly pullback, if it is doing an orderly pullback, obviously the index constituents must also be undergoing a similar pattern. That's why we'll see the fractal nature of the index and the same kind of patterns repeating in the constituents of the index. So ABB is also undergoing that kind of orderly pullback. Prestige last time was also bit scary because last Friday we saw that it was forming a shooting star kind of a pattern, and then it uh, uh, had a small drawdown, but again it moved up. Now again we see on the Friday candle that it is again a shooting star. So this definitely looks like an overextended move, but we can never say that this is the overextension in a bull market or in a momentum stock, because we'll never know the upper bounds in the momentum stock. So we'll keep a look at it. And you see Adani Power, this is also an orderly pullback. This is a perfect example, textbook example of what an orderly pullback means. It rose, it overextended from its 21-day EMA by well above 30% before the election season, and from there it now started to consolidate in an orderly pullback. Now it is touching the 21-day EMA. I'll have to see how it moves up from this level. So there was a similar case happening with Vedanta Limited last week when we did the weekly review. We saw that the same thing happened with Vedanta Limited. It also underwent a orderly pullback from its 21 EMA. It had a extreme outperformance or extreme, what do you call, extension, overextension from its 21-day EMA of 27-30%. But after that, it went an orderly pullback. And recently, it broke out from this pullback, and it took a bounce support at 21 EMA with good volumes. So I'm hoping that the same kind of pattern might repeat in other Nifty Junior 50 stocks. And if you see my portfolio, most of them are from Nifty Junior 50, because in my portfolio, 46% are from Nifty Junior 50, and the remaining 46% are from Nifty Midcap 150. Only one stock, which is M&M, Mahindra Mahindra, is from the Nifty 50 index. Now let's take a look at other stocks. Siemens is also undergoing a orderly pullback to its 21-day EMA. M&M, same thing. CG Power is consolidating at its horizontal levels. So it looks like some consolidation is happening after the immediate bounce back after the election results. Dixon is the same case in a very tight range, but this is an overextension definitely. This did move by 12-15%. We'll have to see how it moves from here onwards. And then Cummins, we just showed. Cummins also is at the horizontal levels, maybe trying to form a inverted tendons pattern. Motherson is overextended, way overextended actually, 16%. This overextension has been happening since the breakout from 22nd May. Okay, now the last stock is RVNL. RVNL also made a good breakout from its recent base formation, and from this it made a move breakout, and it did retest the these breakout levels. Also it coincides to happens to coincide with the 21 EMA, and again it did a pullback and is moving up. So this looks a very good chart. So overall, all the stocks in the portfolio look good except for Adani Power. Adani Power chart wise, it looks good, but from my strategies rules point of view, it looks bad because my rule says that to exit whenever it goes below 20%. I don't want to tweak my rules for some stocks because that will induce bad habit into me of tweaking rules every now and then. I want to follow the rules as much as I can and stick to it, and hopeful that the Adani Power doesn't go below 20%. I wanted to actually reduce the 20% rule to 25% if I had a good buffer of risk appetite. How do I define a risk appetite? By the portfolio heat. A portfolio heat is defined as the net profit divided by the worst case loss. The worst case loss is, let's say, 3 lakhs. Now the profit I'm sitting at is 1.81 lakh. So if I divide this by this, it is at 60%. So if the number is much above, well above 100%, maybe 120, 150 or 200%, then the risk I'm taking is way less. So for every 1 rupee loss, I'm already sitting at 2 rupees profit. So that gives me confidence that I am in a position of comfort and I can take more risk. Now, when I have that comfort, I'll be in a position to reduce the 20% rule to 25%. So if the stock falls by 25%, maybe I want to hold till it falls by 25%. As you guys also have seen in my earlier videos, that I've demonstrated that if you have a higher threshold to withdraw or higher threshold to withstand pain, the longer we can stay in the markets. The longer we stay in the markets, the better will be the compounding and the lesser will be the transaction costs. And we can ride the stocks for a longer period of time. There are many advantages. Now, that concludes the weekly review. I'll see you guys again on next video. Thank you. Bye. Have a nice day.